So, when we're looking at kind of the setup into Apple's earnings, does it feel like because this stock has been languishing a little bit, that the bar is lower, or do you think it still has a lot of work to do to convince investors?
Like you said, the stock's underperformed. It's underperformed year to date. It underperformed last year, but expectations are actually reasonably high. We do think the setup is reasonable. We're in line with consensus. Consensus is looking for iPhone growth of almost 14%. It's one of Apple's strongest growth quarters that we've had. One of the things that we're more concerned about, though, is what the guidance looks like, especially as we're looking out in the second half of the year. And the other thing that I think people are focused in on is just the rising component costs, things such as memory prices that keep going up pretty much on a daily basis.
So do you expect then the margins to be affected? I mean, Apple's kind of known for some pretty healthy margins.
Definitely in the second half of the year, Apple's probably going to be in a position where they're going to need to take a price increase on the iPhone, where I think people are concerned about the impact that could have on demand. And if they don't take a price increase on the iPhone, I think you'd have more concerns about margins to that point.
Gotcha. Interesting. So we'll watch for that potential price increase. In terms of the backward-looking quarter, Apple rolled out the new iPhone Air, and there's been some chatter that people weren't too excited about that one. I'm curious how you think it's going to do and how that's going to show up in the numbers.
Yeah, from our perspective, the Air is not selling well. That's not going to be the driver for the quarter. What we really see is the driver for the quarter, and you're going to have pretty strong unit sales for Apple, but the driver for the quarter is going to be what it's been for the last couple of years, really strong Pro and Pro Max sales. And what that's going to mean for Apple is stronger mix towards higher average selling prices. And so you'll see ASPs up along with unit sales, but the Air was not necessarily a driver for the quarter at all.
Gotcha. Let's also talk about some of the other overhangs for the company that maybe we'll get some updates on, right? And some of that has to do with Siri, has to do with AI, and now the company is partnering with Google. What questions do you have for them around how that's all going to work?
Yeah, I think the key question for us is how is Apple going to monetize AI? They're also utilizing a competitor's technology. So I think those are really key questions. When Apple initially announced Apple Intelligence, a lot of the promises that they told us they would come out with were not there. And then they delayed the rollout. So what we'll really be listening for are what key integrations are coming. I think what people want to see is deep integration with Siri, with other applications that you can use on your iPhone. That's really the key question. And then beyond that, one of the things that we were excited about last year is whether or not AI will drive a hardware upgrade cycle, get people that have older devices to really want to upgrade their phone. That's really the key question. So, can they integrate this technology, whether or not it's theirs, doesn't really matter as long as it can drive some type of hardware cycle. Those would really be the key focus items.
Well, and that kind of brings up the question I've had about the AI integration to the phone, which is whether it's a push or a pull. In other words, like, is this something that users want? Many of them are probably already using ChatGPT or Claude or what have you on the phone. So, is it just a matter of that Apple has to have it to drive that upgrade cycle that you're talking about?
Well, again, that's the question: is how deeply can Apple integrate Gemini into Siri, where Siri can then control the different applications on your phone, where Siri could then go book a flight for you or schedule a restaurant reservation for you without you having to actually do anything. That's the key question of how deeply Apple can integrate it. And then whether or not they can actually monetize it. Some of the research that we've done, consumer surveys, really suggests that consumers are not interested in paying for something like that, but that would just deepen, Apple's integration into consumers' lives, and I think make, their technology more indispensable. So I think consumers would end up using that, but the key for Apple, I guess, again, would be keeping people within their ecosystem, utilizing their products, and ultimately they'd sell more smartphones.
And Brandon, you've got a sector weight rating here, hold equivalent rating. What would you be looking from them to change your mind on that?
I think we'd want to see, expectations in terms of where growth expectations are really come down. From our perspective, growth expectations for iPhone are really like up and to the right for the next couple of years. That's pretty lofty expectations for a company that is in a much more mature business and generally more cyclical. So we'd want to see expectations come down and or the valuation move lower. Apple's not inexpensive. It trades at roughly 22 times EBITDA. That's higher than it's been historically. So we'd want to be picking up the stock when expectations are much lower and or the stock is trading at below its historical average.
Brandon, thanks a lot. Appreciate it.
Thanks, Julie.